Good morning, good afternoon, good evening, wherever you're watching me today. My name is Peter. Welcome back to Invest with Peter. So today, guys, I'm going to be talking about why we need to be a bit worried. And I'm not saying you should be worried, but in February before the invasion of Ukraine, I released a video. I was like, well, I think the invasion is going to be going ahead. If you want to confirm that, you can go to my maybe 4 or 5 months ago in my video. Just go back there. You're going to see that video I made. I won't call it a prediction, but I said I think the invasion is going to be going on. It's going to be going ahead rather, and we should plan for these, plan for things to come. We don't know where the bottom is going to be and why we need to be very careful. Well, if you see me for the first time, my name is Peter Ads. I bring this valuable information every week and all that. If you've not subscribed, please subscribe to the channel, like the video, and put your comment down below, and I will be there to answer your question. Ask any question. I'm going to answer your question, and that's it. But today is a different one, and I'll tell you the reason why we need to be a bit worried concerning what's to come. All right, but before then, let's talk about the job report that came out on, I think that was on Friday. The job report came out. It came out lower than, higher than expected. When they say higher than expected, we should be like, okay, when it's higher, we should be happy because it's higher than the expected number. But in this case, it's no, right? We want the number to be lower than expected numbers, but the number came out over 260 something thousand jobs. Unemployed, jobs were reported, and market was expecting, I think, 250 something or 225,000 market was expecting. So it was still higher, though it's been lower, month by month, but it's not as, it's not exact number the market was expecting. That's why we saw a sell-off in the market. And I'll explain to you in a plain, language today what Fed means by they want to destroy demand. There's so many investors. You might be an elite investor. You might be somebody who's just coming to invest, or somebody who doesn't know anything at all about investing. I'll break this down today, and you're going to understand what Fed's actually talking about. Talking about destroying demand. Looking at inflation. Inflation has been up. After COVID, even during COVID, there's been a projection that there's going to be inflation because economy were closed down, China was locked down, the world was locked down, and all that stuff. So the supply then was destroyed, right? So not so many goods were produced, not so many things were coming out of the factory and all that stuff. And coming out of COVID, why? So economies were opening up, Western economy, African, Asians were opening up, but China refused to open their economy fully. They were still going about zero tolerance on COVID-19, right? So that's why in some area the supply chain has been disrupted, and that's why we have higher demand and lower supply, right? And going back to our economics 101, right? So when the demand is high and the supply is low, then the price of goods will go up, right? If you get what I mean by that. So the higher the demand, the lower the supply. To balance it up, the price has to go up. So because people have been saving money during COVID, people are now working from home, people are not able to spend their money, so everybody's got enough money, and also the Fed by giving people free money and all that stuff. So there's been a lot of stash of money in the bank, and people were buying things left and right. So because the demand, like I said earlier on, the supply chain has been disrupted, production was halted during COVID crisis, so there's less good to be going out there, but the limited one that is available, the price actually shoots up, and that's what is causing the inflation of what we're buying today and all that stuff. So now inflation is creeping up, and US actually recorded 9 point something, UK going over double digits inflation, European showing double digit and all that stuff. So this is actually creeping in and destroying people's finance and all that stuff. So for Fed to come out and actually address this, there's need for them to raise rates. So why do raising rate affect you? For people who are trying to buy a house, buy a car, buy, taking up loans and all that stuff. So you're going to see this in your APR. APR is the interest rate you're going to be paying on every purchase you are actually making. So for example, if you buy a house for $400,000 now, and you have to deposit 10%, which is $40,000, or you're going to be paying, they will tell you, okay, the interest rate is going to be 3.5%. So that is where you're going to feel the pinch of what the Fed are doing at the moment. So raising rate means raising your interest rate. So you're going to be paying more for the debt you are having. So the people that will be laughing now are the people who are actually saving money, or people who's got money in the bank. So these are the people that will be really in good hands at this moment. So now let's talk about why, Fed want people to be unemployed. Now, when people are employed, they have money to spend, they have money to splash around and to dish out. But when we have less people working, there's going to be limited amount of money going out and buying stuff. So with that, price of good is going to come down, because raising rate, that means they are raising interest rates. So whatever you're thinking of buying now, the Feds are raising the interest rate, you'll be paying more. So by the time you walk into your bank and say, I want to borrow $40,000, and they show you the APR, you're going to be paying back interest rate, you'll be like, nah, I can't afford that. Then you pull out of that. So that's what. So when less people are working, they will have less people buying stuff. That's when the price of good naturally will come down. That is how it works naturally. I'm just talking about economics 101 today, right, on this platform. So I'm talking for people who don't know anything about investing, so them to understand what they are watching on CNBC or watching on Yahoo Finance, because sometimes they're using there, you may not understand, but I'm breaking it down now for you to understand. So anytime the Fed comes out to raise rate, know that they are raising your interest rate. So they don't want people to be working. They want less people to be working. They want people to lose their job, so that the goods out there will not be bought. That means if the goods is lying about for 3, 4, 5 months, what's the producer going to do? They're going to bring down the price of the goods. So the price actually comes down when people refuse to buy the product. That is actually how it works out to bring down the inflation. So that's that on that. So if you understand what I'm talking about, then you're going to understand whatever people are telling you on the news or analysts are talking about. So that's what Fed want. They want to destroy demand. That means they want people to stop buying stuff and the goods to be there, and price naturally comes down from there. That's when you hear them, they want to destroy demand. That's how it works. So Fed was expecting less numbers, because every month, price of good, people that are employed, job report comes out, the number of people who are working, the number of people who are unemployed, they bring this data down, and that tells us what the Fed use as a strategy of what they want to do next, because the Fed we have now, they are data driven Fed. So they want to be talking about, okay, if we have less people working, that means naturally the demand for goods is going to come down, price of goods is going to come down. That's inflation. So by raising the rate to bring down the price, that's how it works, guys. And also the CPI is coming on Thursday. That's another caveat for this month. Hopefully CPI comes out lower by maybe 8 points. Should be expecting 8.1. I think market will be expecting 8.1, 7.9, 7.8 to the extreme. But whatever comes out is going to actually determine where we're going next. Now, let's talk about what I'm actually going to be explaining today about, should we be afraid at this point? Well, Putin, the other day, he was saying, well, I'm not bluffing and I'm not joking about nuclear weapon. Will we use this if we're pressured, or if the integrity of my country is tampered with, or if my country is being affected by anything, going on in the West, or you're trying to threaten the peace of Russia? I will be forced to use any means and every means to defend the integrity of his country. By saying this in a plain language, it's talking about the nuclear weapon. And analysts and politicians and intelligence, government intelligence agency were saying it might use a strategic nuclear weapon. So that means it's not going to be a full-blown nuclear weapon. It's going to be like some drops of some sarin gas or some stuff like that that's going to wipe people out and all that stuff. So, and if it's not full-blown nukes, if it's going to be strategic or some types of nuclear weapon that is going to cause a bit of damage to European Union members and European stocks. That's how it affects us. If this happen, eventually market is going to, I won't say collapse, but market is going to panic like you always do. Second World War, market panic. If you go into your chart and see the history of world wars, Cold War, Vietnam War, Second World War, and all these world invasion and all that, market always panic because these are the cases of black swan, that's what they call it, that affect the market and market panic. So market is going to panic if Putin goes ahead and use a tactical, that's what I'm looking for, tactical nuclear weapon on Ukraine. And that's going to go into a different case entirely. And I still don't think it's going to be a full-blown third world war. But I think if Putin go ahead and use that, then the Western country, they're going to equip Ukraine with long-range missiles. And you're going to see Ukraine targeting mainland Russia. Moscow will be getting hit. Most of the cities in Russia and states in Russia have not been hit by any missile and all that stuff. That's when you see Ukraine, firing long-range ballistic missiles to destroy Petersburg, Moscow, and all that stuff. That's when it's going to be a full-blown. And then we don't know if Putin is going to be going ahead with his full-blown nuclear weapon, and this is what's going to collapse the whole economy. Hopefully, I pray this doesn't happen, because if it does, then forget about your portfolio and all that stuff. That's where we go to commodity. But I hope I'm invested in the market, so don't think I'm not invested. I'm not a YouTuber that tells you, well, I'm not in the market, I'm cash up now, I'm this and that. No, I'm invested like you are. My portfolio is down up to 30%. I don't care at this point, because my projection is 10, 20 years. That's my projection. That's why you see me come here, smile, laugh, even though portfolio is down. I don't care, because I don't need the money tomorrow. I don't need the money next year. I don't need the money in the next 5 years. The money is there to grow itself, and all that stuff. Big investors, they always leave money in the market to do his job, and they do their daily work and daily job and buy and dollar cost average. So what I'm saying now is, if it actually happened that Putin go ahead by using tactical nuclear weapon, market is going to panic. Maybe it's going to go down like around 10% or 20%. We might see 10, 20% in a day. So, well, guess what I'm going to be doing? I'm going to be buying again. I'm not going anywhere. So this is the strategy I think you should be using. If you don't have the mind, if you're not strong enough, if you're not strong-willed, you might want to hold on to your cash, because I think with the way things are going, of recent, couple of hours ago, a bridge that actually linked Russia mainland with Crimea was blown up, and this is one of the biggest link. This is one of the biggest blow to Putin at this point, because he used this means to transport his goods, services, and weapons from Russia to Crimea. This bridge has been blown up. US now is unserviceable at this point. So we think this guy, if they push him to extend, he might be using a tactical nuclear weapon. So be very careful out there. I don't want to bore you. I don't want to scare you. I'm just telling you that this might happen, and if it does, how you should handle the situation. I'm not going to be panicking. I'm not panicking, and I advise you not to panic, but just have it at the back of your mind that in case this happens, what am I going to do? I'm not going to tell you what to do, because I'm not a financial advisor. I'm just a random guy on YouTube telling you what I'm doing, not what you should do. Guys, if you've not subscribed to my channel, please do like and put your comment down below, and I'll see you on the next one. Bye for now.